Here's a summary of Rivian's 2025 Q4 earnings call transcript, focusing on key financial metrics, management commentary, and outlook. Introduction and CEO's remarks. RJ Scaringe. RJ Scaringe opened the call by highlighting 2025 as a foundational year for Rivian, focused on execution and scaling the business. He emphasized progress in their technology roadmap, particularly with the upcoming R2 vehicle, and improvements in customer experience and the path to profitability. Key highlights from RJ Scaringe. R1 success. The R1S was recognized as the best-selling premium electric vehicle priced above $70,000 in several key states, including California and New York, and the best-selling SUV over $70,000 in California, regardless of powertrain. R2 launch imminent. RJ expressed excitement about being months away from customer deliveries of the R2, their first mass-market vehicle, which addresses a significant gap in the market for compelling EVs priced around or below $50,000. R2 capabilities. The R2 will offer a dual-motor all-wheel drive setup with over 650 horsepower and more than 300 miles of range. He drove a manufacturing validation build of the R2 and noted extremely positive pre-production media reviews, calling it a game changer. AI and autonomy. Rivian showcased its vertically integrated hardware, software, and autonomy teams at their AI and Autonomy Day, unveiling the RAP1 chip. They highlighted the release of universal hands-free for Gen 2 customers, doubling the utilization of their autonomy features. The Rivian Assistant is expected to launch early this year. Volkswagen partnership. Significant progress has been made with a joint venture with Volkswagen Group, with vehicles delivered for winter testing 13 months after the JV's formation, demonstrating the scalability of Rivian's technology platform across different brands and price points. 2026 outlook. RJ believes 2026 will be an inflection point for Rivian, driven by the R2 launch and their technology roadmap, positioning the company for mass-market success globally. CFO's remarks. Claire McDonough. Claire McDonough provided a detailed financial overview, emphasizing improvements in unit economics and a significant increase in gross profit. Key financial metrics and highlights from Claire McDonough. Full year 2025 financial progress. Average sales price, ASP, improved by nearly $5,500 year-over-year, driven by the introduction of second-generation R1 quad models, a higher mix of R1 units, and increased base prices for the 2026 model year. Automotive cost of goods sold, COGS, per unit, improved by approximately $9,500 year-over-year due to material cost reductions and operational efficiencies. Gross profit achieved over $1.3 billion in improvement for the full year, marking Rivian's first full year of positive gross profit. This was driven by improved unit economics and strong performance in the software and services segment. Adjusted EBITDA ended 2025 at the favorable end of guidance, reflecting cost management and gross profit performance. Fourth quarter 2025 financials. Consolidated revenues, approximately $1.3 billion. Consolidated gross profit, $120 million. Gross profit margin, 9%. Included $108 million depreciation and $26 million stock-based compensation. Adjusted EBITDA losses, negative $465 million, a $137 million improvement from Q3 2025. Automotive segment, Q4 2025 vehicles produced, 10,974. Vehicles delivered, 9,745. Automotive revenue, $839 million. Automotive gross profit, negative $59 million, a $71 million improvement from Q3 2025, attributed to a higher mix of commercial vans. Software and services segment, Q4 2025 revenue, $447 million. Gross profit, $179 million. Approximately 60% of revenue was from the Volkswagen Group joint venture. Strong growth was also seen in marketing and vehicle repair/maintenance. Balance sheet ended 2025 with approximately $6.1 billion in cash, cash equivalents, and short-term investments. Expects to receive an additional $2 billion from the Volkswagen Group in 2026, $1 billion investment. Subject to winter testing completion, $1 billion non-recourse debt. 2026 guidance, vehicle deliveries, 62,000 to 67,000 total vehicles, R1, R2, and commercial vans. First half 2026 deliveries, approximately 9,000 to 11,000 vehicles per quarter. R2 deliveries will begin in Q2 with small volumes, ramping up in the second half. R1 and commercial van volumes are expected to be roughly in line with 2025 totals. R2 production, launch variant with a single shift, adding a second shift towards the end of the year. Automotive gross profit, expected to increase year over year, but will be negatively impacted in Q2 and Q3 by the R2 launch complexity, becoming a benefit in Q4 as production ramps. 2026 is considered a transition year for automotive segment profitability. Adjusted EBITDA loss between $2.1 billion and $1.8 billion. This includes increased R&D for autonomy, LiDAR, RIVN chips, limited point-to-point functionality by year-end, and continued growth in SG&A for sales and service expansion. Capital expenditures, $1.95 billion to $2.05 billion for R2 production, Georgia plant construction kickoff, and infrastructure build-out. Key discussion points and Q&A highlights, R2 demand and delivery timing. Management is confident in R2 demand, citing a substantial backlog and a lack of direct competition in its segment. They will announce product and pricing details on March 12, when customers can begin configuring their vehicles. While new ADAS technology is on the horizon, they do not anticipate current hardware to be a significant barrier to delivery, offering options for customers to wait for future iterations. Partnerships and licensing. Rivian sees significant potential for licensing its technology platform, particularly its network architecture and RIVN chip, to other OEMs. The Volkswagen partnership is a key proof point for this scalability. Volkswagen joint venture. The JV is progressing well, with vehicles undergoing winter testing. The target for the first VW Group vehicle launch utilizing Rivian's technology is 2027. The software and services segment, with approximately 60% from the VW JV, is expected to drive significant gross profit. Georgia plant and capital. Construction for the Georgia plant is underway. The company ended 2025 with $6.1 billion in cash and expects $2 billion more from VW in 2026. They remain opportunistic on capital. Production ramps. The R2 ramp-up will begin with a single shift and add a second shift by year-end 2026, with a third shift in 2027. The pace of ramp-up is dictated by the slowest component in the supply chain. Profitability targets. Rivian aims for R2 to contribute to automotive gross profit positivity by the end of 2026. The long-term vision includes a 20% gross profit target for the automotive segment, potentially exceeding 25% overall with software and services. Autonomy roadmap. Universal hands-free is the first step, with plans for point-to-point navigation, hands-off/eyes-off capabilities, and eventually Level 4 autonomy. Hardware upgrades are not planned for retrofits, but software updates will continue. LiDAR will be added to vehicles in early 2027, integrated into their Gen 3 architecture. Automotive COGS reduction, driven by increased commercial van mix, operational efficiencies, and material cost reductions, particularly in lithium prices, for Gen 2 vehicles. Joint sourcing for our 2 low-voltage electronics and anticipated tariff relief will also contribute to lower costs. Commercial van, EDV, opportunities. Expects growth in EDV demand with new variants like an all-wheel drive version and a larger battery pack for Amazon, designed to unlock specific use cases. Hiring for production. Rivian has sufficient candidates and robust training programs to support the hiring of new shifts for our 2 production in Normal, Illinois, and the future Georgia plant. Pricing and costs. The Q4 2025 adjusted EBITDA guidance includes considerations for raw material cost increases and the current supply chain backdrop. Our one demand opportunity. The discontinuation of Tesla's Model X presents an opportunity for Rivian's R1, which is already a strong performer in the premium segment. VW data. Rivian's technology platform provided to Volkswagen does not include their autonomy platform. It focuses on embedded software and architecture. RAP1 chip. The RAP1 chip has potential applications beyond vehicles, including robotics, and is a core component of their autonomy efforts, which represent their largest R&D investment. Battery manufacturing. Rivian is partnering with key battery cell suppliers and actively sourcing precursor materials like lithium. They are leveraging supplier investments in production capacity rather than pursuing captive cell manufacturing at this time. Significant risk factors, implied or stated, are R2 production ramp-up. Execution risk associated with launching a new vehicle and scaling production, including supply chain dependencies and managing supplier relationships. Autonomy development. Achieving ambitious Level 4 autonomy goals and ensuring safe, reliable software updates. The timing and success of Gen 3 hardware and software are critical. Competition. While R2 addresses a gap, the EV market remains competitive, and new entrants or aggressive pricing from incumbents could pose challenges. Macroeconomic conditions. Fluctuations in raw material costs, inflation, and consumer spending can impact demand and profitability. Capital requirements. The substantial capital expenditure for scaling production and R&D requires continued financial discipline and access to capital. Lowlights. Automotive segment gross profit. The automotive segment continues to experience negative gross profit, although it is improving significantly. The R2 launch is expected to create temporary headwinds in Q2 and Q3 of 2026. Adjusted EBITDA losses. Rivian continues to report substantial adjusted EBITDA losses, which are projected to continue in 2026, albeit with a narrowing range. No hardware retrofits for autonomy. Existing R1 and upcoming R2 customers will not have the option for hardware upgrades like LiDAR through retrofits, meaning they may not have access to the full suite of future autonomy features. In summary, Rivian's Q4 2025 earnings call painted a picture of a company in a foundational year, successfully achieving positive gross profit for the first time and poised for significant growth in 2026 with the launch of the R2. While challenges remain in achieving overall profitability and scaling production, the company expressed strong confidence in its technology, product roadmap, and market position.